Yes, Federal Chairman Jerome Powell will be speaking this week, and I hope you guys have been paying attention because this week he might be your best friend or he might be your worst enemy. So I hope y'all are paying attention to what we got going on this week. We got him talking at 2:30 p.m. on Wednesday after the Fed rate interest decision has been made, and this is going to be one of the key moments this year to figure out where we are going with markets. We've got this stuff going on with the banks, and now we have our interest rate decision, right? We are about to get that. So listen, y'all might want to pay attention to this video, but before I explain to you guys the implications, just know we got that stuff going on. Stick around for the intro and let's get into it. Now, before we get into the video, please do not take any of the advice in this channel as a recommendation. All views are my own, and information on this channel are for information and educational purposes only. This is not financial advice and should not substitute for financial advice from a professional. Now, as you can see, as we get into the charts, we're pretty much in the middle of no man's land, right? I've got a couple key levels marked off, 417 and 361, in anticipation of the chairman speaking. We have our interest rate decision, and right now word on the street is saying that we pretty much have about a 69% chance of a quarter point rate hike. And let me explain to you guys why I feel this is so important, right? We have all of these issues with the banking liquidity crisis. We have SVB that just had to get saved by the Fed. We also have First Republic, I believe is the bank. They've also had some issues, and now we have to figure out what's going to happen with them. And what I'm thinking is, when we first heard of the news for the banks where SVB first crashed, I thought that this was going to be a huge problem, and the markets reacted in that way. And the way that these Fed futures looked when that first happened, they had almost an 80% chance or something like that the Fed will pause rates. Since then, it's kind of calmed back down and it's come back down to the 70% quarter point rate hike. However, I'm not buying it, right? I need to see what the rate hike is actually going to come out to be and what Jerome Powell is actually going to say. We get this information on Wednesday, and the reason that I say I need to wait for us to get that is because I believe that once we do finally get that information, if we end up getting a quarter point rate hike, then the Fed hasn't broken the system yet, and they do not believe that the issues that we've been seeing with the banks has been systemic. Now, if they end up pausing rates, this might be temporarily bullish, but you have to think of this as a larger issue behind, right? The market might say, oh snap, all right, cool, they pause rates and everybody will be rushing into tech stocks and stuff like that. But what comes after that may be a lot worse because we don't understand how deep this runs, right? Why would the Fed pause rates if things weren't that bad and inflation hasn't gotten down to a 2% target rate? So this is something that I'm definitely paying attention to and something that I definitely want to see what happens once we get this decision, and I will react to the markets then. If we do end up getting our regular quarter point hike, everything is all good with the banks. We're still trying to fight inflation. That's still going to be the main storyline. This bank epidemic will end up waning into the abyss. We'll end up forgetting about it. And then we'll continue to see what route the Fed wants to take in this fight towards inflation on its way to some rate hike pauses. The fear and greed index is sitting around fear. Earlier last week, it was in extreme fear. So we've moved out of that a little bit. I want to say it's based on the fact that the Fed is projected to raise a quarter point. I think that if they do go through and they do raise a quarter point, it'll end up calming markets down and calming people down to understand that, hey, what's going on with the banks is not that big of a deal. But like I said, big but, we don't know what's going to happen, man. At the time of me recording this video, it's Monday at 9 p.m. It would be Tuesday, and we still have Wednesday at 2 o'clock to get our decisions. Now, I am playing the market a little bit bullish. I do believe there is some bullishness in the market for now. You guys can see I kind of marked off this 380 zone. I had spoke about it in one of my earlier market predictions videos, letting you guys know that this 380 mark, I do expect us to get a little bounce here. I'm expecting us to continue to rally up until about 404, 405. We might get there before 2:30 p.m. Whenever Powell speaks and we get that Fed interest rate hike. But I would be definitely very cautious, and I would look to take my profits at that level. I wouldn't try to ride this to 417. I don't think the market is in position to do that. I'm expecting within the next 2 to 3 within the next 2 days we continue to rise. Now, again, this is not financial advice. This is just the way that I'm playing it. If we look at the QQQ, let's go over and look at our tech stocks. You can see how bullish we have been. I'm actually playing tech right now. I have a couple of positions in some of these big tech names, and I love this candle right here coming off of that 294 support. I do believe 311 is our peak, unless we get something coming in the next couple of days that skyrockets us and we end up shooting past 311, but I just don't see that. Obviously, we have a lot of question marks in the air. I am playing this very defensively. I've been telling you guys about healthcare. I'm still in my healthcare plays. And I'm still looking to just kind of keep myself, a little bit of wiggle room and try to capitalize on some of the cash that I have. I'm not trying to put myself in a position where I can end up getting extremely hurt by what ends up happening in the next 2 days. But I do believe that we need to continue to see what goes on with these banks. And definitely Powell is the man, right? Powell is the man. We need to figure out exactly what he's going to say, what he's going to come out and say about these banks, what he's going to say about the interest rate, what he's going to say about future projections. There's a lot of things that are up in the air, but I do believe we rally for a little bit and then we end up calming down. I also want to mention another note, right? Should we end up getting that 0.25% rate hike, I do believe the market will end up turning bearish because interest rates are still going up until we eventually make a nice little rally or find some support, possibly at 295 or somewhere lower if we're looking at the Qs. Now, again, I'm going to reiterate this. If we end up getting a rate hike pause, I believe we will get a huge rally off rip, and then we'll probably end up dropping. Markets will probably end up dropping because that means that something is systemically wrong with the banks. And at that point, I believe that we end up going into a recession. But we still have a few more days to wait for that. I will be dropping some more content and finding out exactly what's going on with these banks. Let me just show you guys what else is on for this week. What are the information we're getting? I showed you guys the rate decision. We also have initial jobless claims on 8:30 on Thursday, and we also have the St. Louis Fed President Bullard speaking on the 24th as well. So those are pretty much our biggest events. Wednesday will definitely be a market mover. You guys want to make sure you have this on your calendar and understand what's going on, understand the implications, make sure you're properly positioned, whether in cash or not. But again, this is not financial advice. I am not a financial advisor. But if you guys like the information I've been giving you guys on this video and you guys don't want to miss out on any of the content, be sure y'all hit that subscribe button and that like button so I can know that y'all are enjoying the content and it helps motivate me to continue to put this out for you guys. Now, let's go back and let's just see some of the strongest sectors for the week. We've been seeing XLV. I told you guys I wanted this at 125. We ended up getting a nice bounce off of here. Let's look at this on the weekly chart. Nice, huge bounce off that 125 zone. I really like this. Nice pickup in volume here, breaking the average volume that we've been seeing. Y'all see that right there. I do like XLV. I am in a couple of XLV plays. I really like this. I also told you guys about energy. I'm not going to tell you guys that I'm always right. Energy I've been preaching on. I got smacked at the 82 level. It ended up continuing to drop. I want to see it come down to the 73, 70 level before I recommit. I believe that there will be some other buyers there along with myself. And I believe at this point we might end up catching a bid back up to 82. So I'm waiting for that. And I also really like, if you guys haven't been paying attention, utilities has been going insane. You guys should be playing this. Again, this is not financial advice. I don't recommend this. But this level right here at 65 was phenomenal. Huge bounce off of here. Nice bullish engulfing candle. And it looks like we're going to continue that momentum. So definitely be on the lookout for some utility companies. Make sure you guys are positioned well. This should be a sector that does well in a recession or in any kind of inflationary environment, as these are things that people are going to continuously need. So there you have it, y'all. That is my market prediction for the week. As always, it's your boy, Mr. World Shoe. Don't do anything I wouldn't do. I'm going to catch y'all on the next one. And remember to always protect the capital.